39.5% year-to-date increase for gold. Absolutely wild. Some people, though, they're telling us we haven't seen anything yet. We saw gold hit a new all-time high this week, $3,654. And we don't even have to say new nominal all-time high, $3,654 an ounce. That's the highest gold price in history, inflation adjusted or otherwise. So that's a 39.5% year-to-date gain. Now for perspective, Bitcoin is up 20.5% year-to-date. So this is historically significant and a giant move for a defensive asset. Now some people out there, they're saying, we're just getting started here. So I want to look a little bit deeper into this bull run. I want to look at what this has the potential to be, and I'm going to lay that potential out. But we need to start with where it's currently at because even the actual numbers are pretty wild. Quick shout out to channel sponsors Summit Metals. If you're looking for gold and silver, be sure to check them out. They help make this content possible, so I really appreciate them, but they're also just a really good place to buy from. SummitMetals.com. So there's more to the bull rally than just gold, but that's where we're going to start off. The bull run started December of 2015 with gold spot price at $1,050 an ounce. Now, I tend to talk about it as really getting its legs in 2019, but if we want to look at the full cycle, we need to start at the turning point for gold price. So let me give you some quick math. Since the 2015 low, gold is up nearly 250%. That's in just under 10 years. And then we know things got a lot more interesting in 2020, enough for me to spin up this channel to talk about it. We came into 2020 at $1,520, so a 140% gain since then. Last year in 2024 alone, gold gained 28%, and then this year to date, we've seen gold run almost 40%. So it's gaining on a parabolic curve. The angle is getting steeper. Price is moving faster and faster. Now, this video is going to be primarily about how gold is leading this run, but we're going to get up to speed quickly with miners and silver. If you watch any videos in this space, you've heard about gold leading silver, and you've probably heard about the leverage that mining companies can have. Well, that leverage is on full display right now with the GDX and the GDXJ shooting up 93.8% and 97.6% respectively. That's year to date. Those are ETFs containing senior gold miners in the case of the GDX and junior gold miners in the case of the GDXJ. So gold miners are already on a huge run this year, and that performance is further evidence that we're in the next leg of the bull run, the leg that industry analysts like to call the super cycle. Now, gold is still the big story here, but we're finally starting to see some of this idea that silver could pass up gold coming to life. And I say finally because this story of silver shooting past gold has been told and retold and retold to the point where it probably seems to feel like little boys crying wolf. Now, I haven't cried wolf there for two reasons. First, silver is heavily influenced by its use in manufacturing. Gold is not. So 50% of annual silver demand comes from industrial applications. So any kind of industrial slowdown or even a sharp short-term spike in the price of silver would have a way of tempering demand, and that would keep a lid on its price. And then second, a big part of the gold bull run has been central bank demand. And regardless of what some people out there are trying to convince you of, central banks do not hold silver as a foreign reserve. Now, I did mention last December I was buying silver. I was expecting a spike, and I'm going to follow this video up with more details there where I see this whole thing going. But I was able to get silver around $30 an ounce, premium included in some of those cases. So I added some physical silver and I upped my ETF positions. Now, I don't buy silver like I buy gold. I buy gold defensively as savings. I buy silver differently. I buy it as a trade. And that's outside of maybe a few hundred ounces that I do hold long term. Well, silver is starting its run now, and I feel like it deserves its own video here because it pushed through $41 an ounce, which is a level that we haven't seen in 14 years. And it's also a level that's still about $10 short of its past all-time nominal high, and a level that people have been calling for relentlessly for years. $10 short, $60 short, $460 short. It all depends on who you watch here on YouTube. But stripping away the hype, Silver has a history of moving late. It's the classic tortoise and the hare story. It pulls off the road, it takes a nap, and then when it wakes up, it can move very fast because the market is so much smaller than gold and traders pile in on momentum. And that's why I like silver as a trade, but not necessarily as a long-term hold. Now, all that said, I think $41 is just the beginning for silver. It hasn't passed up gold yet. That means it still has a lot of room to move. So that's the current state of the bull run. No hype, no predictions here. Everything that I've laid out so far is the current actual performance. And look, that's been pretty impressive. Maybe not something that would make a whole video on its own, at least not a very exciting one. So let's get into where this whole thing could go. And to do that, I want to start with some new news. We have just found out officially that the economy is on shakier footing than we realized. That's the headline. Annual revisions to non-farm payrolls data for the year prior to March 2025 showed a drop of 911,000 jobs from what we were told originally. So that means the economy was weaker all through 2024, weaker than the base case that justified hawkish rate decisions holding gold back, weaker than the base case behind the strong dollar narrative that also held gold back. We don't have to look far to see a possible case of a much bigger jump in gold price. We have Goldman Sachs analysts giving a possible case of the Trump administration's moves against the independence of the Federal Reserve, triggering a flight out of the US dollar and treasury bonds into gold. In their case, gold could reach $5,000 an ounce. Now, the catalyst could be any number of things. The trigger is simply any shift away from US bonds and into gold. Now, here's how that would work. If 1% of the privately owned U.S. Treasury market were to flow into gold, that would mean about $570 billion moving into the gold market, which is much smaller by comparison. Now, just to be clear here, it's smaller because what they're really talking about is the gold ETF market. The market cap of gold is around $24.75 trillion, but the size of the gold ETF market, well, that's more like $407 billion. So if $570 billion in new capital hits a $407 billion market, well, you get it. The price could go wild, all the way to $5,000 an ounce, according to Goldman Sachs. Now, a run on gold price leading to $5,000 an ounce would represent a 40% push higher. It's one more reason why I think fractional gold is getting more relevant. Now, that alone would make this the second biggest sustained bull market in history. But even that wouldn't be the end of it, not for gold and not for the wider precious metals market, because like I said, gold leads minor valuations because that increase in spot price flows directly into their profits, and gold leads silver too, similar to the impact that I described coming from a possible treasury exodus. The idea being that capital flowing from a large market into a small market has a supersize effect. So gold has 10 times the market cap that silver does, so even a fraction of that capital rolling into silver could hit with a multiplied impact. And what I don't think we can do yet is suggest that this is the biggest bull market in history. Because if you look at the run from 1970 gold price, it was $35 an ounce. It ran to $350 by 1980. That was a 10x move, a 10x with a temporary 24x if you count that single day spike to $850. So the 1970s bull market still stands as the most explosive sustained run in history. But consider the initial conditions. Gold was fixed at $35 coming out of the Bretton Woods to start that rally. In this rally, it doesn't have any of that artificially suppressed price, so expecting a 10x or a 24x just wouldn't be quite as realistic in the short term. But a run to $5,000, that would be almost a 5x move from the December 2015 price of $1,050. That is not an unlikely case. It's one that we could see happen a few different ways, really, and one that some analysts suggest would still only be halfway through the cycle. So with that in mind, 10x really might not be out of line. It would mean gold hits $10,500 an ounce. Sound crazy? Well, sure, but on a long enough timeline, any of those cases start to become expected. Let's call it good there. This gold rally has been lots of fun to watch. Predicting the next leg, well, that's fun too. In my last video, I mentioned $4,000 gold in 2026, but it isn't hard to see a path to $4,500 depending on the wider economy. $5,000, that's a more extreme case, and it's not my personal prediction for the likely case, just to be clear. $10,000 gold, that would be something on a much longer timeline. That's my take. Let us know what you think, though, in the comments. And then while you're there, be sure to hit that like button. If you found any of this interesting, be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.